Good morning, everybody. Welcome to today's 1Mby1M Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of the mission, we do these roundtables almost every week. And we've been doing this for a long, long time. This is the 296th session. And we've had an opportunity to work with so many of you from so many different parts of the world. It's been really thrilling and enlightening to see what's happening, what kind of entrepreneurship, what kind of projects are coming together in different parts of the world. Over 40,000 people have been here, and hopefully we will be able to continue bringing you this programming. This recording will be available later on after the program. If you're live tweeting the show today, please use hashtag 1M1M. And our Twitter handles are at 1Mby1M and at Romana. We publish a lot of rich content through the Twitter channel, and the YouTube channel is where you will find this recording after the show, as well as previous roundtable recordings. And they're very worth listening to. There are a lot of interesting discussions, guests, interesting projects, interesting strategizing on projects. So if you're looking for a body of material to learn from, this is a great one. These are the call-in instructions. I will put this up later. We're not quite ready for call-in right now, but it is a roundtable, so we want you to line up your questions and think about what issues they want to bring up for discussion later on in the session, and we will put the slides up when we are ready for that part of the program today. We will start today with Venky Balasubramanian, co-founder and CEO of Plivo. Plivo is an Indian company that has taken off really greatly, and Venky has a fabulous story. So given that we have a huge Indian audience here, I invited Venky to come and inspire the audience. Welcome, Venky.
Hey, thanks, Shana.
So Venky, let's kind of introduce our audience to your business, yourself, a little bit of what are you doing with the company?
Sure, yeah, I'll start with a quick round of intro and then kind of get to what we do as a business. So I'm one of the founders of the company, been in telecom for over 10 years now with various different functions. I have a development background and now day-to-day I oversee a lot of business aspects of the company along with my co-founder Mike. We founded Plivo in 2011, and what we essentially do is, we are an API for businesses to be able to kind of integrate SMS and voice functionality into their mobile and web apps. So for example, a lot of these mobile apps or mobile messaging apps which you install today, essentially they want to verify your phone number even before you start using them, right? Because we are seeing this shift away from usernames to your phone number being your identity. We actually power a lot of these apps on your mobile phones to verify, or for them to verify you guys via SMS and voice globally. I can name them. Some of these are pretty large names, names which are huge brands, but I can't name them on this call right now. But we power a lot of these apps globally, and obviously,
How did you come up with this idea? How did you know to go after this problem? Is this something you had seen in your job as a telecom engineer before?
Yeah, that's an interesting one. Actually, when we started back in 2011, we were more focused on the traditional market or traditional telecom use case, which was, the call centers, the IVRs. That's where our background is. Both Mike and I come from this traditional call center background, right, where we work with companies like that. So we actually started back with Plivo's focus being in that traditional market, but over the last 3-4 years, I mean, and you must have seen as well, there has been such a huge growth and shift in the market where, mobile is kind of coming to the foreground, and the traditional telecom market seems to be growing a lot slower. So we've started seeing more and more of these web and mobile apps being kind of in the forefront than your traditional telecom space, and which is where we see a lot more shift in the market, and we see a lot of these companies, mobile web companies using us for different use cases. And the use case which I mentioned to you, the verification, that was just one out of them.
Now, you built this company with very little financing. Tell us a little bit of how you have, put one foot before the other to achieve such a capital-efficient execution on the business.
Yeah, sure. So yeah, this was back in 2011. Like I said, we started out in 2011 more as an open source hobby project initially for the first half. And then second half, we got a bit serious. We had a lot of customers come in from the open source hobby project. From the open source hobby project, more from a consulting point of view. That's when we realized, there is a real business to this. We want to put more time and effort into making sure we kind of set this up as a real business, incorporated in the U.S., kind of got our initial first few customers. We went profitable. I mean, it's hard to hear that term these days, but we kind of went profitable back in 2011. It was easy also because it was just Mike and I, working out of our apartments, and
you were doing consulting projects on your open source code essentially, and that's what got you the cash.
Yeah, so we kind of transitioned there. So open source consulting project initial first half. And then once we kind of registered our business, a couple of these customers came up to us and said, we want to be your cloud customers. Would you build something for us, and we'll pay you X $1,000? And we were like, yeah, wow, sure, why not, right? And that's where we got our first initial set of customers who were paying us, $20,000, $30,000 a month, and that was enough for us to kind of get profitable with a two-member team. So we kind of so we've been in this mix of bootstrapped, funding, and then profitable kind of a mode. So early 2011, we were in this bootstrap mode where we had a couple of customers. Then we went into this mode of, we said, okay, you know what? We got our initial bootstrap customers, and we had a lot of interest from a few key angel investors who wanted to kind of come in and help us early on. Not just with money, but also with a lot of advice and their networking stuff. So we kind of took, convertible notes or our seed round initially, which was about, $250,000. This was our first seed round in 2011, which obviously gave us a little bit of impetus to kind of go hire our initial set of folks and kind of scale out from there. Early 2012. We were part of Y Combinator. We applied to YC, and they saw honestly we were not expecting a call, but we kind of got called for an interview in the Bay Area, and then we kind of were part of the YC. Even till then, we were kind of early beta, private beta mode. During July 2012 is when we actually launched publicly. And this is when TechCrunch actually kind of covered us. There was a good amount of market focus, and primarily what we realized is when you start out small, you have to have some kind of focus there in terms of markets. I mean, going all out, trying to focus on everyone could get you focusing on no one. So we did that. We focused on in the U.S. markets initially. A lot of our business focus in 2012 was voice. When I say voice, our users were building applications and they were using us for integrating voice functionality, right? So making that voice call for different use cases in their app or in their mobile app, in their web app or mobile app, right? So that's what happened in 2012. We saw a lot of growth once we went public, public as in like public launch. So and in the later part of the year 2012. We got a good amount of interest from, angels, VCs. This was after our demo day in YC, or Y Combinator, and we said, it's probably strategic for us to kind of go raise, but we want to do that on a convertible note kind of a method. So we did that in late 2012. This was a larger raise, but again, a seed round convertible note of 1.75 million. So totally, we had raised about 2 million by then.
But all convertible notes. You've had 2 million of convertible notes essentially.
That's right. That's right. All of it was a convertible note.
So I want to probe a couple of points that you talked about in this journey so far. How did you play the India Silicon Valley geographies in your journey? If I recall, you started in India, right?
Yeah. So yeah, we actually started. Our first hires were in India, but both Mike and I were remote. So he was in France, and I was in India, and then we moved to the U.S. As a part of Y Combinator, both of us. So at this point we had 2 offices. We had a few hires in India, and then we had an office in San Francisco, in the Bay Area, and that office was just Mike and I.
And the first angel financing was from India or from the Valley?
No, the first one was from India, yes. But it was for the U.S. entity. So the way we structured, so let me kind of give you some more detail here, right, how we did this. So essentially what we did was, day one we realized our market is going to be the U.S. market. It's not going to be, an Indian market. So we incorporated in the U.S. As a Delaware C Corp, and then whatever rounds of money we raised, whether it be in India or U.S., we kind of raised in the U.S. entity, right? Although that said, our first round of financing was in India from a key set of angel investors, which luckily we kind of got to pick. But the money raised was in the U.S. entity, and then our first few hires were in India as well, right? In fact, the first 7 hires were in India, right? All of them were engineers working on building the product and releasing that. So how did we, use that advantage or this setup for us to our advantage? I think one of the key reasons we've been able to grow the company and be profitable and to scale the way we've scaled it is because of having this setup where, we've had India, Silicon Valley kind of setup. Because, things have changed in India right now, but in 2011, there were not too many startups here in India, but there's a lot of good talent available here. There is an abundant pool of talent here where, hiring was much more easier in 2011 compared to now. 2015, 16 has been hard. There are tons and tons of, startups you're competing with, and with the likes of Flipkart and all of these other guys, right? But back then, it was much more easier for us to kind of hire our first 10, 15 developers, world-class developers, right? Like from the likes of, Amazon, Yahoo, Microsoft, Google. Who would not want to just work on one large product without knowing what they're doing, but be a part of an early startup team and kind of be able to, contribute to your features and knowing how it impacts the business, right? So own things end to end. So that was one of the keys, right? We got the best of the pool of talent, having our team in India, and we kind of built out a business team in the Valley in San Francisco. So we have our marketing and sales in San Francisco, and even today our engineering, a good product support, and a lot of our other backend teams are based out of India. So we've kind of leveraged that pretty aggressively. Now we are profitable, but at that point when we were growing out, if we had our team in the Bay Area alone, it would have been much harder to hire. So that's where I think the advantage came in.
Definitely, and it's also very expensive. The Bay Area engineering talent is very, very expensive.
Oh, for sure, and it's getting worse. I probably think it's going to change this year, but it's just getting worse day by day.
So folks, those of you who are listening, you may recall if you were here last week or have listened to the recording, we had Sasha Mirchandani from K Capital in India, small early stage fund, last week, who said kind of the same thing, is that all Indian investors actually are reconciled with the fact that B2B businesses out of India are more or less structured to be global businesses. These businesses don't scale very fast in India. As a result, both the entrepreneurs and the investors tend to want the companies to be based in either Silicon Valley or somewhere else in the US, and facing global growth rates, essentially, taking advantage of global growth rates. So you would be best positioned to do this kind of business by incorporating your companies in the US and even if you raise money in India, the Indian investors are completely aware of the fact that you're going to be building a global company and they will be investing in the US entity, which is what Venky has done, and it has worked very well for him. So Venky, the other question I wanted to double click down on is Y Combinator. It's, you said you moved to the US to work with Y Combinator. What was that experience like? What did you get out of it? And is this something that you recommend to other Indian entrepreneurs who are working in your mode?
Yeah, sure. I mean, that's a good question. In fact, we actually were planning to come to the US and move there, and both Mike and I, but it was supposed to be later part of 2012. YC, what that did is just get us there like 6 months earlier. Would I recommend it? Absolutely. I think it's been very helpful in terms of coming from both Mike and I. We are first-time founders, and we had no experience, doing a startup, building, like you said, a B2B market, focused on in the US, early growth market. But so many things are just new the first time, right? Like there's sales, there's marketing, there's product development, customer support, all these functions. Sometimes, it helps when you can get like advice and you see other companies doing it, right? So those 3 months for us were absolutely fantastic. You get the best set of folks you work with, both as mentors and then peers, right? There are so many good companies who are your peers, and you compete with them in the same room. And also share a lot of instances of what's happening with different companies, and they go on to become pretty good friends of yours, moving out of that program, right? So it's not just about being part of that program for essentially the structure itself, but a lot of good things come out of it. A lot of people have asked me before, should I do YC for the money? I don't think so, because the money is basically not too much, in terms of the amount itself. But I would do YC for the sake of, a lot of network they give you, the professional advice they give you. You get to kind of meet a lot of other companies who are in a similar situation, and you realize that there is no need for you to have done, 2, 3, 4, 5 companies before for you to come and do what you're doing at this scale right now, right? So yeah, absolutely recommended if you want to apply to YC.
Y Combinator, by the way, the time when you did Y Combinator, the amount of money was much smaller than what it is now. You were more in that 15K to 20K kind of phase, weren't you?
Yeah, that's right. That's exactly what it was, and we were actually the second company to be in YC from India. There was another company called Interview Street. They were part of YC before, but yeah, I mean, we were a second company. It was still new for Indian companies to apply to YC and get through. So we were super excited. But yeah, I mean, the money was much lower, but the kind of exposure it gave us during that time was phenomenal.
The money today that Y Combinator gives you is not as low. It's 120K, I think, for 7 to 10% of equity, or 7% of equity, which I think is a much better deal than it was before from a money point of view, pure money point of view.
Yeah, I agree. It's a higher number. I think they've evolved as well over the period of time, but and like you said, it's a higher number. But again, I mean, if you just want, if you're just looking out for capital, there are much better leads out there in the market, and it's probably
I think the caveat there, however, is that Y Combinator, when they started, they were doing much earlier stage companies. And today, because of the level of competition that has kicked into getting into Y Combinator, the application process of getting into Y Combinator, you almost have to have done quite a lot of incubation work on your own or bootstrapping work on your own before you would be able to get into Y Combinator. So I think in your case, the fact that you already had something going, you had customers, you had a product of some sort that you could then develop into a business that was already a business, all that goes a long way. And I think the philosophy that we follow in 1 million by 1 million is that no matter who your investor is or who your equity style accelerator is, whether it's Y Combinator or Techstars, there are only a few really good ones that will give you money, take equity, and give you exposure to their networks in a meaningful way, and they have meaningful networks. The competition to get into those is very high, so you're going to need to bootstrap your way into a place where you differentiate, and for them you are an attractive investment. Remember, these accelerators are equity model companies. They're essentially funds. These Y Combinator Techstars, these are essentially venture funds, and their returns are dependent on how well you're going to do and how well their equity investment in you is going to do. So that's just commentary on the scenario. Going back to your story, what I find absolutely, fascinating is that you are what, about 10 million annual revenue run rate at this point?
Actually, much more, but we don't disclose the numbers. I mean, and not even run rate from a pure revenue perspective, annual revenue perspective.
Let's just say you're more than 10 million in revenue, annual revenue, and you only have $2 million worth of angel financing in form of convertible notes. So there has been almost no dilution in the company except the equity you gave to Y Combinator. Is that correct?
Yes, that's right. That's correct. And in fact, a couple of things what you mentioned before this question. I think that's really good advice for everyone starting out a company, right? Before applying, to any accelerator or kind of going and fundraising out there, it's very important to kind of be, aware of what you're doing, build that product out, have some kind of progress, have a product market fit so that you understand what you're doing is already there in the space, and then it becomes much easier for you to kind of go pitch to some of these guys out there, right? I think that's a great piece of advice. And yeah, I mean, coming back to this question, it's essentially is YC, us founders and the team members. We give out the stock options to team members as well. So yeah, so team members as well. Yes, that's what it is.
So Venky, what does the competitive landscape look like for you? And how are you competing?
Sure. Good question. So, I mean, if you look at APIs, especially in voice and SMS, still a very early stage. There are mainly a few companies in this space in who we encounter, and in a lot of our deals we kind of work on in B2B space. One of them is Twilio. They're a company founded much earlier than us. They were founded in 2008. And then another company we come across in a lot of these deals is Nexmo. And Twilio, I believe, is founded in San Francisco as well. Nexmo is a European company. They were, I think, founded the same year as us. So yeah, I mean, these are two companies we kind of come across in a lot of these deals. Like I said, yeah, this is still an early market, so we should see maybe more companies pop up, but we obviously have, all three of us have some head start in this space.
So when you encounter them in deals, how do you win these deals?
Yeah,
what is your positioning to win against these companies?
Yeah, sure. I mean, I think, there are two ways to look at it, right? Like from a marketing perspective, you can have a generic standpoint in terms of what your differentiation is. But what we realize is when you talk to these customers, essentially being a platform, they can use you in so many different ways that, there could be different differentiators for different markets, right, or different verticals. So, for example, if you're looking at some of these user verification apps where they want to verify your number, the time is very sensitive. They're essentially using you for a customer acquisition use case, right? So if you fail, they fail to acquire a customer. So quality becomes super essential, in them sending out that message, SMS to your phone, and you getting that SMS within 10, 15 seconds, right? And try doing that globally, that becomes a huge challenge. So quality is the first thing we encounter in some of these use cases, and I mean, it's not just a pitch we pitch with. They're free to test, right? It's pay as you go. All these companies are out there. They can just kind of sign up and start testing, and they would know the results in a day or two. So typically, that's our pitch. We say all our products are out there. Quality is a key for us for your use cases. Please feel free to go test out there. And it's not something we're just putting in marketing slides, right? The second, which is key, a lot of these companies scale, and they scale to hundreds and millions of users, right? So when you scale, quality is great, but then it kind of starts adding up as a cost as well. So you have to be competitive from a cost perspective. So what we've done is we've kind of gone ahead and worked with a lot of carriers. When I say carriers, telecom guys like British Telecom, AT&T, Vodafone, all of these guys. We partnered with a lot of these carriers across the globe directly, cut out all the middlemen in between, because of which, obviously, one, we've been able to improve quality, but two, also come up with like a competitive pricing structure. So when these companies scale, they get that advantage, and it's not a huge cost addition from their perspective to add a new user, right? So these are two key reasons we win a lot of deals. And then apart from this, we have a fabulous customer support. And I think it's super critical that it's not just about having just a product out there. It's how you treat your customers, how you ensure they kind of become your evangelist going forward. And it's not about just answering questions to your customers. You have to wow them, right, with the user experience, with the product, but also when they reach out to your support team for questions and stuff. That's your chance to kind of wow those customers, and they become your evangelist to kind of go spread the word.
And what are the key levers of growth today, given where you are?
Yeah, sure. We've been kind of growing decently. We've been doubling for the last, couple of years, and this is in high millions of dollars annual revenue every year. And initially, first 2 years, it was a much higher growth rate when we were lower revenue rate, right? So for us, we've realized that a lot of our sales has been inbound. Marketing has been super critical, right? I think it's been a key lever where we've had a lot of inbound traffic coming into our site, with us leveraging, organic, inorganic senses of traffic. In fact, paid or inorganic paid traffic came in pretty late, but organic traffic was a key lever for us. We realized that there are specific pain points in the market where customers tend to come online and search for. So that's been a huge lever in making sure that we kind of capture that traffic on our side, and then make sure we fine-tune site traffic to conversion, right? Where we get in front of the customer right away with the right piece of info in terms of what they're looking for. So I think inbound marketing is one key thing one should focus on. In fact, like I said, both Mike and I are devs, and this is our first startup, so we did not have a lot of idea of inbound marketing when we started this, but one piece of advice to all of you guys would be to kind of focus on inbound marketing for a good bit of it, unless you are doing a product which is upwards of $20,000–$30,000 a month kind of to a B2B market. But if you do in the B2B space, in the typical SaaS area, between $100 to $1,000 of revenue per month per customer, I would really recommend you spend some time on this. Either learn yourself and be able to do this, maybe not be an expert, but know what you're doing, or get somebody early on in your team to kind of spend time on that. I think a lot of companies fail not because they don't have good products, but they're not able to market themselves correctly. So that's one key lever. And second has been customer referrals. So we've got a good amount of customer referrals, from existing guys, and then they send, similar kind of businesses because of them having this feel that they like what we've provided them on our infrastructure today. So I think these two things have been our key levers. And now we're starting to focus and expand our sales team as well, and start doing more and more direct sales to larger B2B companies. But that's much later. We do a lot of conferences. We have booths and all of that stuff. But that's only in the third or fourth year. first few years we were just focused on making sure we have a lot of inbound traffic and we make sure we optimize and convert a lot of that.
And last question, your competitor Twilio, for instance, is a unicorn, and of course we are kind of swept up in this unicorn mania, and we're starting to see the bubble burst. How do you view this whole ruckus around the unicorn phenomenon? How do you interpret it? How do you react to it, etc.?
Yeah, sure. So specifically about Twilio, I don't have many comments there. You've heard, I think you must have heard as well in the market that they're planning to go public soon, so we will see how that goes. Yeah, I mean, in terms of the market overall, a lot of these companies are so-called unicorns. A lot of these companies deserve it. I mean, in terms of how they have built that revenue out, profit out, have the growth cycles. But there are a lot of these companies which are not there in terms of numbers. It's just been more of like market, if not high, but a lot of VCs or a lot of fundraising at like much higher numbers. But we are clearly seeing a market correction, like you said, late half of last year and early this year. I am a firm believer that we see a lot more of that in the coming year, coming part of the year, where you will see a lot of these companies come down to their actual valuations and not being able to keep those estimates they've given to venture capitalism and the numbers they've raised funds on. But there are a few companies in there which probably deserve to be in there because of their actual numbers, but not all of them, right? And I'm a firm believer, and we would see some of these things kind of pan out. I mean, if you look at the tech industry earlier this year, a lot of these companies, especially public companies, are down like 30–40% in the market, including big names like Twitter, right? So, so yeah, I mean, it's going to be interesting to see how things pan out later this year.
So, folks, those who are listening, I'll give you a little, and many of you have read a lot of my commentary on this topic. I've written extensively. There are real unicorns, and then there are pseudo-unicorns. So the real unicorns are the ones who have the fundamentals to actually sustain valuation of the levels that they're getting, and the pseudo-unicorns are based on, overvalued, overhyped financing rounds, and they cannot sustain those valuations. And then you may have read my series, From Unicorn to Unicorps. There's a whole bunch of companies that are turning into unicorps as they encountered the public market and so on and so forth. So the reason I continuously showcase case studies like Plivo and Venky's story is because you are going to be a lot more successful, you're going to create a lot more wealth, and you're going to build sustainable companies in the mode in which Venky is building Plivo. You will, if you can stay true to the fundamentals, even if it's a little bit slower, if you can, get slowly and steadily $200 million in revenue and manage your company within reasonable amounts of capital, you will be making a lot more money. You will have good, solid, sustainable exits, whether it's an IPO or otherwise. And that is a better way, in my opinion, to build businesses than getting ahead of the market in terms of valuations and then crashing and burning because you cannot deliver on the fundamentals. This, I would say, is a core philosophy of the 1 Million by 1 Million program. It is not a core philosophy of Y Combinator or Techstars at all. Those guys are very much in the Silicon Valley unicorn mania mode. So very often you will get fed a lot of, financing when you don't need to get fed that much financing. A more disciplined approach would make you more successful. A few sessions back, I think it was probably in December, a friend of mine was here on the show. His name is Ashmit Siddhana. He's now founded his own venture capital fund. He used to be at Foundation Capital before. You may want to look up the discussion we had about financing strategy, and he used a very good metaphor that financing is like drugs. Revenues, profits, customers, these are like vitamins and proteins, things that make your business grow in a healthy way. Financing is like drugs. You take a little bit, it's okay. If you get out of control, then you're going to become an addict, and your life is going to fall apart, and the same way the business is going to go completely out of control. So keep that analogy in mind. Venky, thank you for sharing your marvelous journey, and I hear that you're going to stay for the mentoring session of the program.
Yeah, that's right. Thanks a lot for your time as well.
Fabulous. Okay, so folks, those of you who are going to be pitching today, I just want to set a few expectations. This program is entirely for you. We are on your side. We have no agenda to make you feel bad, or, this is not Shark Tank. We don't need to gratuitously make you, cringe and entertain people. This is not an entertainment program. It is a program where it's a working session. We are here to work together to help you, make progress. And, the whole mission is acceleration. We know a few things that as first-time entrepreneurs, you haven't yet learned potentially. And we have had over 700 successful entrepreneurs participate in the 1Mby1M case study program, and we've had a lot of advice and input of what has worked, what has not worked. So you get to ride on their experience and their insights and input and leverage that. So that's why you're here. It is very possible that you may disagree with my feedback or Venky's feedback or any of your peer group's feedback in the public chat. That's okay. You have the right, you have the prerogative to disagree with anything you want to disagree with. But just listen and consider, because again, what we are telling you usually is based on experience, and it's generally worth considering. And then you can discard it if you decide that you don't agree with it. And if you're not pitching, please do participate. This is a roundtable. We want your participation as much as possible. And the more you ask questions, the more you engage in discussions, the more you will learn. It's like college, right? You learn a lot by asking questions in the sessions and discussing. So we're going to start with Ben Stern. Ben, if you could unmute your line, that would be great. And Ben, you have a lot of slides, so you have to, kind of make this manageable and pick and choose which ones you're going to focus on.
Absolutely. I do have a lot of slides, and I'm sorry if it's a lot of clicks, but I will move through them pretty quickly.
Okay, go ahead.
All right, so my name is Ben Stern. I am from the East Coast. I am a former IP lawyer. I really wanted to be more entrepreneurial. And last year, I caught the entrepreneurship bug when there was a massive data breach of an online dating site, and I decided to see if I could take advantage of that in some way. I taught myself SQL. I'm not a developer, but I called up my college roommate, and he showed me some things, and I was able to build a database and have people call in and get information from this site that was leaked. And I realized that if you have something that people want, if there are people willing to pay for it, and you have a way to reach them, you can make some money. So the first day that I operated, I was profitable. Next slide. So my company is called IvyAchievement. It's been around since last October. The purpose is to present university admissions consulting that's quality, high value with a premium brand. And my contact information is there, and there's more to the end. You can move on. So our target customers, the university admissions pool is very, very large. I decided to target high school and college students born outside the United States and first-generation Americans applying to universities in the U.S., U.K., and Canada, primarily the U.S., and also Canada. And those, but the parents are the ones who pay, so they're the real customers. You can skip this slide. This just shows how many undergraduates there are. There are a lot of international students, which I'll get to in the next couple of slides.
Where do you want to go? You have to give me some indication of where you want to spend the time.
Okay, could you go to the one with, can you go 4 back, please?
4 back?
4 backward, yes. two more backward. Okay. That's 4. Anyway, the international to get, and this is the most important slide. International enrollments are up. The top three countries that come to the United States are China, India, and South Korea. Saudi Arabia is 4th, but Saudi Arabia just cut a big funding program. So I decided I wanted to focus on China, India, and South Korea. In terms of TAM for my target, it depends on how you value each person, but it's somewhere between, if it's $100 per person, we're talking about per year, first-year undergraduates who are coming from overseas or whose parents were born overseas, is somewhere between 28 million and 184 million per year. That's my TAM, and that represents only enrolled students, not necessarily applicants. The pool of applicants is much larger. So this is from several sources, and I'm happy to provide those.
But your audiences are the applicants, not the accepted people, right?
Correct. They're the applicants. There aren't too many. There aren't data on that. The schools don't share, how many people from which countries apply, but it's very large. This is a baseline TAM, and it's very large. So in the past couple of months, I've decided not to focus on China. I've focused on India instead. There's some challenges. I don't have to discuss these, but they're cultural, transactional, and bureaucratic challenges that have kept me out of the China market for now. There's some new developments, but you can move on to the next slide, and I can discuss India. So the number of students from India is up. Relative to China, it's held steady, but it's been up significantly. And from buzz on the internet, it seems like this year it'll continue. 2014, 2015, which was 2 years, 2 previous academic years, you saw a very fast rise in the students coming from India. You can move to the next slide. So I think there's a huge opportunity in India. Primarily, they're served by local operations, but they are not reliable from my discussions with students there, and I can tell you about those a little later. There are a lot of unscrupulous businesses that basically cheat these kids and their families. The level of English language, at least composition education, is you may be familiar, is pretty low in India, and these college application services are not often equipped to provide the best level of support with students' essays. And in many cities, these industries are focused in Mumbai and Delhi, but in like Kolkata, there are very few competitors. So if I can get in there, establish a presence there is a huge opportunity. You can move on to the next slide.
Can I make a comment here? Kolkata happens to also be a highly literary city, so the shortage of people who write good English is not very high.
Okay, that's well. From talking to students, I don't know if they're interested in helping. There's people who are writing literature are interested in helping students with their essays, and if we can tap into that and have them locally help students as part of our company, then that would be great.
Okay, keep going.
So there are some challenges in doing business in India. Financially, it's a very cash-based economy, and there are online payments. PayPal, students use all my revenues. Almost all my revenue has been through PayPal, including from India. But there are limitations on that. You have to be affiliated with a large bank. People don't often want to deal with it. Paytm is another popular payment service there, but there are a lot of regulations and limits on the amount you can spend. I have a partner school that I'll mention them briefly a little later. They're working on a way. They're targeting the Indian market too, and they're working on a way to collect like cash on delivery for various vouchers and things for their services. And that's something I'm talking to them about partnering up on. So our strategy for acquiring customers is a premium yet accessible brand, efficient, personalized, high caliber free services, and strategic partnerships with industry. You can move on. So what do I mean by the next slide?
Then this doesn't say anything to me. There's a whole mouthful of stuff on this slide. It didn't tell me anything. I didn't understand anything about your customer acquisition strategy there.
Okay, well, this is what I'm getting into the next few slides.
Okay.
To create a premium brand, we use high Ivy League and similar imagery, our awareness and protection of IP. We want to create an aspirational brand, and I put together to bootstrap in the beginning a board of advisors with various degrees from prestigious universities, and they include members from who were born in the countries that we're targeting. You can move on. I can show you a few of those. These are people I've met in the course of being in Silicon Valley, and people I know from school. One's from Columbia, one's from Yale. One I met here in Silicon Valley. And if you want to see their details, they're on my website. And there are a few more board members. So to be accessible, this is my business model. I want to have a global presence with localized content that appeals to people in various localities, engagement in social media, very simple to use, no sign-up required for my service. Then it is a freemium model. You can move to the next slide. So I have a global presence. You can move to the next one. You can't really see the details, but I have, oh, you just went through several, like 6 or 7 slides.
Ben, you're taking a bit too long to get to simple questions. As you know, this is supposed to be a 6-slide presentation, and you have 45 slides here. So
okay.
Explain to us.
Okay.
Hold on. Explain to us what is the free service. If you're trying to do a freemium, what is free and what is premium? What are people expected to get for free, and what are they expected to get for paid?
Sure. Okay. This is a perfect slide. I provide for free. If somebody submits an essay, I provide a review of the structure, the tone, the content, and the writing mechanics of the essay. Or if they haven't written an essay yet, I give them a free 10-minute consultation. And I can talk about the conversion numbers on the next few slides. It's very easy to upload. Next slide. These are illustrative. Next slide. Those are just also illustrative. Industry partnerships is another way to get them customers, to acquire customers, and we have a partnership with one. I don't have to talk about that now. Revenue streams. I'm only focusing on one revenue stream, and that's the essay submissions and then follow-on purchases. But I have some other plans for revenue streams. You can move to the next slide.
So your thesis is that you're going to provide people with a structure for an essay and give them some free consultation on how to write these essays, and then they're going to submit the essays. You will review them for a fee. Is that the crux of this business?
Yes, that's correct, and it's been very successful. I have a conversion rate of over 20% of people who use the free services. Okay. You can skip this slide. This is not that important.
Can we get to the numbers? Like what is your traction level right now?
Sure. You can go ahead. One more. Let's see. I'm talking about the. Here you go. This is how I validated my business model. Yeah, I didn't have a huge number of submissions, but I didn't really have a huge marketing budget. I had 205 submissions. 44 ended up being paying customers. That's conversion rate of 21.5%, and then an average revenue per customer of $80, going up to $90, and my monthly cost is only about $400.
And what is the time frame in which you received 205 essay submissions and 45 paying customers?
Most of that was between November and January of November of last year and January of this year. After January, I started focusing more on just developing business and less on soliciting things.
Okay, let's go to your questions.
Okay.
Do you have a slide on questions?
Oh, you can ask me any questions. I'm looking for $300,000 in seed capital. My financial projections, I'm very confident about. I think that I can clear. This is after fixed costs and labor costs, several $100,000 that can be returned to investors. If not after year one, after year two.
Then you are a member of the 1M1M basic program. So the first thing you should do is go study the financing module and what is fundable, what is not fundable. And that will answer a lot of your questions. Instead of spending a lot of time here going over fundability issues, you should go do that. It's probably going to take you several hours to study that curriculum and the material provided, and it will give you a very developed perspective on the fundability of this business and what needs to happen for this to be fundable.
Okay, I believe I have done that. I've reviewed all the lectures on funding, except for one of them that I didn't think applied to me. But I have done that, and I've tried to incorporate into this presentation everything that is required to prove fundability.
So the key point that I see here is that your total available market size is not a fundable market size. It's too small for VCs to be investing. And that is clearly stated in the lectures. You did not catch that?
Oh, no, right now I'm not looking for VC investing. I'm looking for angels.
Angel and VC operate in the exact same model.
The total available market size of 30, this is $30 million per year. That's the very minimum. And we're talking, we're talking up.
It's too small. It's too small.
Per year is too small?
Yeah, it's too small.
I mean, over the course of 5 years.
It's too small.
And I don't understand. That's the very low end. I mean, the $184 million per year is too small for an angel investor?
Yes. All of these are too small. Angel investors work as feeders to the VC. So angel investors need market sizes that would qualify for VC financing eventually, which is billion-dollar plus market sizes. So the criteria for angel and VC is more or less the same. You can do friends and family. At this stage of the game, with the kind of business that you're looking to do, the friends and family style investment would work. Let me actually ask Venky to weigh in. What do you think, Venky, of the business that Ben is proposing to do?
I kind of agree with you, Ramana, in terms of the overall market size. Couple of things I noticed, Ben, I think which may need tweaking in general, more on the slides part of it, right? Like how Ramana said, I think, to be honest, I think till 8th or 10th slides, I was not sure what you're trying to offer to the market in terms of as a product, where like specifically she had to come up and ask for the question of what do you offer for free and what do you charge for? So till that point, I was not clear in terms of what you offer. So I think maybe it's a great business idea, but you may want to go back to your slide deck and refine the pitch in terms of how you pitch this.
Fully agree.
Sure.
By the way, again, in terms of resources, Ben, there is a template in the curriculum which you can pick up and adjust your presentation to the template. The presentation really is not good. This presentation is not going to work with anybody. So you really need to doctor the presentation and make it a crisp 10-slide presentation that immediately, out of the gate tells you what do you do. This is not a complex business, right? I can summarize this, whatever needs to be summarized out of here in 5 minutes, and you were going on and on and on and on. So Venky is pointing out something that is very much something that you need to adjust right away.
Yeah, I appreciate that feedback. In the materials, sorry, Venky, is that you?
Yeah, one more input quickly was that I'm still a little confused in terms of, is this business going to be, so, there are a couple of things, right? One, you said you obviously charge for essays for them to review. You review their essays and you charge for that, and you have a free model there. But so how is the review going to be done? Is it going to be in-house? If yes, are you going to build a team? Is that a product versus a services model? Like, you want to figure some of those things out in terms of how the model is going to be. Is it going to be a marketplace where you send that essay out to like other folks? Because I think those questions are going to come up when you go pitch this to any angel or a VC. And how much of it is going to be a tech or a product game here versus how much of it is someone actually sitting and reading the essay? If it's that, then how is it different from a regular services business, right? So you want to kind of think about those aspects as well.
Sure. I mean, I can answer that question briefly if you give me 30 seconds.
Yeah.
Go ahead.
So the value proposition is people here in the United States who are very highly qualified. I'm confident that at a labor rate target labor rate of about $30 an hour, I can get very, very qualified people who don't have anything else to do. With a very high volume, what would happen is that the requests would come in, people could claim them, or they would be, or the essays would be distributed. They would return a review, a free review within 24 hours, and then if there's a conversion, if the student is interested in more services, they would pay that. They would pay me, and I would provide half my revenue to the reviewer, and that's very scalable. That doesn't require too much, too many fancy algorithms. When it's a very high volume, I can invest in distributing. But these would people who I contract with that would be reviewing the essays and returning them, and I would be able to supervise and assure a very high quality of service.
All right, so we have to move on then. I hope you got some feedback. There's a lot of adjustment that needs to happen in this business still, and I hope you'll find value in the curriculum and learn from that at some point. If you decide that you need to work with me interactively, you can upgrade to the premium. But there's a bunch of adjustments that need to happen in this business, especially if you want to build something scalable. But keep working on it. There's a lot of learning you will find already in what you're doing from the lecture modules, and hopefully you'll make good progress very soon.
All right, thank you.
You're welcome. Vishal Singh, please unmute your line.
Yeah, hi, good morning, Samna, and good evening to Venky.
Go ahead, Vishal. Good morning.
Yeah, I'm going to represent local gurus over tonight, like today's session. Speaking about myself, I am basically a mechanical engineer who has worked in countries like Qatar, Dubai, and India. So the whole concept of local gurus has evolved due to the experiences in India with the MNCs who are based out of India and MNCs who are working in Dubai, Qatar, and all these emerging markets. Going to my team, my first spearhead in the sales and marketing category is Vivek Kona. Basically, he was executive director for Sony Pictures based out of USA. He took his voluntary retirement and came back to India 2 years ago. And then since then, we have been discussing on this project on and off when I was visiting India and moving back to Qatar. So my tech lead, basically the architect, is Hemant Purana. He has spent like close to 16 years of his time in designing architecture for this kind of e-commerce platforms and marketing platforms for various companies as well. So my background is basically from the sales and marketing side. The portal, yes, the next slide please. I will just go to the first. The portal basically we are trying to build is totally for the customers. It's basically keeping in mind what the customer in today's date actually need or what is running in the mind when he is going to buy an industrial product. In today's B2B segment or any kind of internet portals available, it is basically based on popularity or price, or they are having one or two brands which they want to showcase, or they want to predominantly launch their own home brand to the market. Whereas the customers of today, which we have targeted, is like looking to find a product based on a technological ground matching their buying power. That is the trust that we are going to target and the target market customers kind of thing. The reason how they will find us is basically the last slide only. Sure, discussing the last slide. Yeah. So the finding of the portal is basically going to happen through the marketing and the people that we have already on the field in various locations, promoting the wireframe to various brands and customers. Convincing will not be required as because we are having a 6-month free trial when we are launching it in July. The next slide, yes. So these are some of the insights that we have picked up from Forbes and Frost & Sullivan that happens in the B2B market segment in today's date worldwide. Basically, 77% of the people on the procurement and technical side do a lot of research over buying any industrial product, or they go to the business website of a particular brand, or they use for Q&A forums based out of US or Europe to check out on what the product can do for them. So this is like the pie chart shows the intervention of a sales rep of a particular brand while convincing a customer to buy a product. It is as good as like 31.8% in industrial side, and then relevant data comes from the online research done by a particular procurement side. Next slide, please. So the product is a little bit unique in terms of its operations and the features that we are trying to put into one place. Basically, we are trying to build an industrial ecosystem where everything is connected, be it a procurement guy or a technical guy or a guy who is making a buying decision. Everyone is connected to each other based on the application of the portal. And we are trying to be an informative portal in terms of we are trying to support the requirement of a customer knowing his need that this product is going to be suited for his application. Whereas in today's market, we have only seen that the product is basically focused on certain 6 parameters, like a machine is only represented on the portal by a particular category or segment. But whereas industrial product goes around, it's totally dependent on the application of where the machine has to be used. There are specific machines for different applications, like specifically focusing on automotive or industrial or process industry, or in the machine for sugar or different kind of industries. So we are going to bifurcate it into a very specific application-based model for products. We are trying to bring value proposition and trying to bring why the product X is expensive and why the product Y is cheaper than the X thing. It's basically we are giving the value proposition to the brands like bigger brands like 1Mby1M, who actually do the technology innovation part, and we want to showcase what innovation is there in the product so that the justification of the cost is there. And speaking on the product details, the design is basically we have taken inspiration from some of the most successful portals in the world. We have taken our inspiration from Granger.com, Manta, Switch, which has been recently launched. In terms of user experience, so we have basically taken a market survey and look and the feel of from the procurement people to come to a UX design, so that it basically appeals to the general user. So a little bit on the directory side, we have seen the competition like IndiaMart, which are very strong in India because of the directory part, but they only focus on providing a directory and service in terms of like finding your reseller. Means if you have a requirement, you can get like 200 of resellers, but out of those 200 resellers which is suited for you, you have to justify that. So next slide, please. So current traction that we have built without having a product right now, we have discussed with some of the marketing people of the top brands in the world, namely 3M, ABB, JCB, L&T in India, Lincoln Electric in Middle East, Time in China, and Promoter and GBC in Europe. These people have actually shown interest in the concept where we would be promoting their brands and their technology on our portal in terms of products and innovation that they have brought to a customer, a particular segment in the industry. Next slide, please. So the challenge in order to build the portal, we need basically it's a global portal, and we want to launch it in Middle East and Africa and the emerging markets with India as well. So we need actually 300K USD or around 95 lakhs to build the product and 100K in order to establish an office in Dubai and infrastructure. So this is the only seed funding that we require in order to launch the product successfully, and because we have already seen the positive results with the brands which are like the key paying brands for us, so we think that we will be profitable after the free trial period itself.
All right, so the first thing that I would like to highlight, and I've said this over and over again, is that investors do not fund concepts. They fund businesses. So if you're looking to raise $300,000 in concept financing, it's not going to work. Venky, what do you think of the presentation so far that Vishal presented here?
Yeah, I think I agree with you. This is super early stage right now. I think maybe going back to the drawing board and figuring out what needs to be done as a next step in terms of as a business, and then kind of making some progress in terms of maybe even having a first working prototype. I think that's going to be critical. In terms of the overall slide deck, I think it was much more crisper than the previous deck, but still getting to the point in terms of what you guys are trying to solve, and kind of bringing that out, we need some more work here, but super early stage right now. I think there is still a good amount of work to be done before you guys want to go raise money.
And Vishal, the other thing that for me is missing here is competition. We are in 2016 March. A lot of things have already happened, and your space, the space that you're trying to go into, has had lots of stuff happen. You know, the procurement space, these marketplaces for different kinds of products, there are manufacturing marketplaces, there are all kinds of marketplaces. So your assumption that nothing has happened or nothing is happening makes me very nervous, you know?
Can I answer that question very crisply kind of thing? Like the business models that have recently launched are industry buying, mortgage, alliance hunt kind of business models, which are basically focusing on only providing the product at a basic discount rate or sufficing the requirement when the person knows what to buy. But in industry, it doesn't happen that it goes like online, or most of the industrial products are not bought online. They will only.
I think that assumption perhaps is true in some geographies. It's not universally true. If you're saying that this assumption is true in India, in Middle East, in North Africa, maybe that's true. But that's what I'm saying is that this model has already taken off in the Western market.
Can I know any name in particular?
Any name in particular? Not off the top of my head, but you should research. I don't remember off the top of my head.
I actually did it. So I've been researching on it for 2 years, and I didn't find any model which is close to that. So that will be a great input if you can give me a model.
I don't know. This is not a market that I study on a daily basis, so I'm not on top of it. But it just seems kind of odd to me that. I almost feel like there are definitely manufacturing exchanges. There are plenty of manufacturing exchanges. The auto industry has their own.
There are only two product lines which are working right now in this model. There are IT exchange and there is construction equipment exchange. But I'm talking about the industrial space as a large, where it happens only by e-commerce stores of a particular brand like 3M, or Cisco kind of thing. But there is no marketplace in today's date, what I have seen, which is actually catering to all the industrial products by marketing.
Which may be fine. If that may be a reasonable positioning for you to latch onto, industrial products in the emerging markets kind of exchange. So try to figure out what you can launch a minimum viable business with without expecting that somebody is going to fund this at a concept stage. That's our guidance to you.
Fine. Duly noted, ma'am. Thank you.
You're welcome. Shine Gopal, you're next. Did I say it right? Is it Shine or some other way to pronounce it? Are you online? I see you on the panelists list. What's happening, Maureen? Okay, Shine is connecting. Folks in the audience, while we are waiting for Shine, if you would like to start asking some questions in public chat, that would be fine at this point, since we have a little bit of time. Are you on the call, Shine? Okay. Anand, are you on the call?
Yeah, hi.
Go ahead with your presentation, Anand.
Yeah, so I'm Anand from India, and be ready because my slides are quite relatively bland than the previous couple of slides. I have strictly maintained the format that was given to me. So
Good.
yeah, so so my startup is called Club Yantra. It's a B2B2C enterprise fitness platform, as we like to call it. It's the world's first B2B2C enterprise fitness platform. So the problem that we are solving is for fitness clubs and members. So these are my two customers. Fitness clubs are the businesses that we go to, and through them we solve the problems of fitness clubs as well as the members. So the question that picked my mind while I was ideating for the business was, what is the biggest problem that the fitness industry, especially the Indian fitness industry, is facing? When I went into fitness clubs and as a member, when I joined a fitness club, I saw myself getting out of the program much before my membership got expired. So most fitness clubs, then I asked most fitness clubs, what is your biggest challenge? So I saw that, and this is backed by a statistical study, that most fitness clubs will lose their members, 60% of their members, within 6 months of the joining time. And why is this happening? So the main reason of having low retention for the fitness clubs is fitness is not at all seen as being given to the customers with an engaged kind of relationship. So fitness as a activity is quite boring, as we all know. What happens is, when a member signs up, he does not follow through what's going on. He has a goal to lose weight, but then what happens is, due to improper attention or the fitness club owner not paying proper attention to this member, he will actually lose focus from the goal and will kind of move away out of the club. And once he moves out, he will never join, because he has seen that this thing doesn't work. So as an industry, the fitness industry is kind of demotivating its own users to come to the fitness club. Another problem that is quite closely related to this is maximum of the data that fitness clubs kind of maintain, especially in India. 80% of the clubs are not recording the data on any kind of electronic medium, even in Excel. So most of them are actually maintaining the data on registers, pen and paper registers. The problem with that kind of approach is, most of the data is unrecorded and it goes out of record.
Anand,
and it's not. Yeah.
Anand, you've spoken for several minutes. I don't think we understand yet what you do, and that's not the right way to present, right? And this is now, I'm speaking for all of you who are trying to present concepts. Within the first minute, first minute and a half, you need to be very clear on what is it that you're doing. So what are we doing here? Are you trying to provide a data management platform to fitness clubs, or what is the business we're talking about here?
Okay, can we come to the next slide? Sorry, the previous one, the product slide. The previous one now.
This is what you have. You have this, and then the next slide is customer acquisition and customer validation, and that's it.
The previous one with the product name.
There is no other slide. This is all we have. You haven't sent any other slide.
Yeah, this one. Okay, I'll explain the product here only. So Club Yantra is a B2B2C enterprise fitness platform. What this means is, what we give to our product is built for two audiences. One is fitness clubs, another is the members of the fitness clubs. The fitness clubs get a CRM kind of tool to manage their operations and do engagement kind of activities for the members. What the members get is a mobile app wherein they can receive notifications from the trainers. They can actually access socially gamified fitness on their cell phones, which is actually operated from the fitness club's point of view. So,
and who is paying for this? Who is the customer?
Fitness clubs. fitness clubs pay for this, and the app is also going to cost the members, but we actually charge all of it from the fitness clubs. So the app actually acts as a mobile trainer for them, which comes as a much lesser cost than a personal trainer comes per month. So that is the product. And so in terms of our traction, we have launched on 1st of January 2016, and till date we have acquired 25 fitness clubs within 2 months of efforts, and the average deal size is 15,000. Our lowest package starts with 1,000 rupees per month, and it goes up to 3,000 rupees per month. And total revenue collected with till date, including discounts and referral and premium products, is 49,630.
And what does that mean? Yeah. Average deal size 15,000. If it's 1,000 to 3,000 a month, are people paying for 6 months, or what is the? How do you get to the average deal size of 15,000?
So we have kept the model very flexible. So when you pay for 1 month, it actually costs you more than $999, and when you actually take it in a yearly billing system, it will cost you $1,000 minimum. So likewise, we have several customers who have taken it for, let's say, 1 month. Some have taken it for 6 months. Some have taken it for a quarter. So it's 15,000 is the average of that kind of payment system. So that is good.
Okay. Venky, what do you think of the presentation so far?
Yeah, I think like Ramana said, maybe you want to have a separate slide after initial slide talking a bit more about the product and explain what you do. But once you went back and kind of explained, then it kind of became evident in terms of what you're planning to do or what you do right now. I think there is a similar model in the healthcare sector, Practo, where they do this for doctors in India specifically, right? So this could work, but I still am not clear on the average deal size. You said $1,000 a month, 1,000 rupees a month, and even if you do the math in yearly, it's just 12,000 rupees. So how does it still get to 15,000? Is something I'm not clear here. But I mean, if you go back and look at how Practo does things, they have a lot of people with feet on street. So obviously you mentioned that in your slides in terms of you going and selling. Practo has been able to kind of build that out with a more organized sector in terms of doctors. Fitness clubs, maybe that. I'm not sure in every city though, but in few large cities you could see something like that happening there. Definitely potential in what the idea is. But I think you may want to revisit the numbers and maybe even reach out and talk to a few folks who are doing something similar in different spaces in the Indian scene.
So what
I'd like to answer. Yeah, go ahead.
Go ahead, Anand.
So yeah, as Venky correctly said, we were kind of inspired by Practo, which came in the way of developing it. So we had actually gone through this case studies of Practo, and as Practo has actually established a B2B software for the doctors, and then it came into B2C kind of retailing of service retailing kind of thing for consumers. So we are also kind of trying to follow the same path, but fitness industry being a totally different kind of industry, it's a different ball game. It comes down more to motivate the members, and so the app side will require more of a gamification kind of thing and more of a social fitness kind of thing, where the members can actually see what other members of their own age groups, their own fitness profile groups are doing and how they are performing, so that it motivates them to come to the club more and more often, and fitness industry grows as a whole. So that is the idea.
Okay, Anand, I'm going to come to your questions because we need to move.
Yeah.
Your first question is how do you handle the bootstrap mode? This is an age-old, eternal question of every bootstrapping entrepreneur. So, we have all kinds of techniques and strategies of bootstrapping in our program that you can learn from, and be happy to teach you all that through the program. But it is a fact, bootstrapping is a resource-constrained mode of operation until you get to a, enough organic revenue with which to move things. We can look at what other ways you can, accelerate growth, but it is a fact that you're going to have to work within a bootstrap mode for a while. What funds are best for B2B SaaS? Mostly all the Indian funds right now are doing B2B SaaS, but they're mostly doing B2B SaaS, as I said. The only way you would get financing is if you're working on a global basis, and it sounds like your business is focused on Indian fitness clubs. So you just hold on, please don't interrupt. In this mode, it is not helpful to talk over each other. It's very difficult for anybody to hear. So my point is that your product, given what you're trying to do with your product, there is nothing that is India-specific to this product. So you're going to need to adjust your thinking to doing a global B2B SaaS business if this is something that you're going to do. And how should you approach VCs for seed fund? You're not ready to approach VCs for seed fund. Your presentation is nowhere near ready to go to a seed fund presentation yet. Do you get introduced to seed funds from through 1M1M? Yes, you do, but you need to be a premium member of the 1M1M program for introductions. So those are our feedback. Now, I believe Shine, thank you, Anand, for your presentation. Good luck. I will explain, by the way, in a bit on how to use the 1M1M program. I'm going to try to squeeze Shine into the discussion very quickly. Shine, you need to... Yes, go ahead.
Good morning, and how are you?
Good. We don't have a lot of time to chit-chat. You're way late.
Okay.
You were supposed to dial in a long time back. Now you are dialed in, so please get moving.
I'm sorry about that. Let me speed through the process then. Okay. Myself, Shine Gopal, based in Cochin and Bangalore. IvyAchievement Group is my organization. We are an wholesaler of various digital platforms, right? So some of my projects are, focused on India, and all these projects are all running. I mean, a couple of projects are already running. One project is now about to launch in the market, and one project is already running for the past 1 year in India. That is in the home improvement sector called InteriorExterior.com. That is a home improvement portal, which is into helping people to find out products, services, and consultants online, and that is going well. And we have now 3 outlets. We have a hybrid model, like people even can walk into the store and select the product which they like, as well as they can search and find vendors and suppliers and things like that. That is going okay in the Indian market, and we have almost a crore turnover now. It's okay. And
so Shine, you have 7 projects under your group. Is that what you're saying?
Yes, that's right.
And what is the size of what is the revenue level of your group?
These are all startups. As I said, the interior exterior is the one project, which
you're trying to do 7 startups in parallel?
Yes.
That is crazy. And it's against everything that we believe in.
Yes, I know that it is crazy, but we have a model called Collaborate. Yeah, and the Collaborate is a platform. Actually, we are bringing in several, people together. It's a collective entrepreneurship model. Like we have several people working in different companies collaborating with us on several projects. And we are having a collective kind of...
Shine, I'm sorry, I'm not the right person to work with on this kind of a model. I believe one startup is incredibly difficult to build. You're trying to build 7 startups in parallel, I will not be able to help you. Venky, what do you think?
Yeah, I completely agree with you. I think one is super hard to kind of focus on. And I'm not sure how it is possible to do multiple startups. In fact, I just looked at the list and they're like completely unrelated. So, it's not even like related products.
This is a non-starter. As far as we are concerned, with our limited expertise, with our limited experience, we don't know how to do 7 startups in parallel. So I don't even want to get started on this.
It's fine. It's all right. Thank you for your time. It's okay.
You're very welcome.
It's fine.
All right, folks. Those of you who have been following this program and are comfortable with the kind of feedback we give you, we request you to refer 1Mby1M to other entrepreneurs. As you can see, we are not trying to please you. We are giving you direct feedback. We are giving you honest feedback, and feedback upon which you can act and upon which you can improve and make progress. That is the whole ethos of the program. It is not very productive for us to tell you what you want to hear. We need to tell you what you need to hear, and if you can stomach that, we are confident that we can help you move forward and make progress. So, but you do need to have, the stomach to be able to digest direct feedback and honest feedback and act upon it so that you can make changes in your business, tweaks, and course corrections in areas where you need work. So I'm going to very, very quickly run you through how to use 1Mby1M, and then we'll try to do a little bit of Q&A. Everything is at 1Mby1M.com. There's a tremendous amount of resources. We have a terrific blog. The Entrepreneur Journeys book series has 12 volumes of case study-based books, using which you can learn different topics. And depending on what is it that you're working on, what phase of your evolution, what industry sector, there are multiple options. This could be a very good starting point for you to get into the 1M1M program. On the website, you'll find a tremendous amount of information. There's lots of FAQs, videos, etc. These roundtables happen every week. This is the 296th roundtable. We have a major milestone coming up. At the end of the month, we're going to do the 300th roundtable in this series. So do go to the free public roundtable page and register to pitch or attend, and we look forward to working with you in an upcoming session. We also have a premium program where we offer extensive methodology guidance, full curriculum, business development, strategy consulting, helping you with financing and media relations. We have a huge footprint, so we can get the word out for you as well. And this premium program is a $1,000 annual membership fee. We do not charge any equity. And the reason we don't is because we are not a fund. We are not trying to follow the model of these early stage funds like Y Combinator or Techstars. We really want to work with very raw startups and startups who may not be financeable, who may be financeable but has to go through quite a bit of bootstrapped incubation phase before financing can even be considered. All of those combinations, permutations and combinations are all right for us. So there is no entrance application or anything here. You can go ahead and start working with the 1Mby1M program anytime, at any point that you want to, as long as you're working in IT and IT-enabled services. And as we found out today, as long as you're not trying to do 7 startups in parallel. That's not something we have expertise in doing. We do 1 startup at a time, but we do a very good job of shepherding startups through that early stage journey. The $1 Million Club is the link where you find case studies of entrepreneurs who have reached $1 million and above in revenue. And on the website, you will also find an evaluation of our ROI equation. We offer you $375,000 plus 5 to 10% equity worth of value for just $1,000 annual membership fee. And you can be in the program for as long as you need to. You can be in the program 2 years, 3 years, 5 years. Whatever you need help with, we are here to help you. We don't have any concept of graduation, no 3-month program, nothing. We do recommend you start with the 1M1M self-assessment. That's a very good place to begin asking yourselves questions about your business. These are the questions we will be asking you. These are the questions investors would be asking you. These are the questions that you need to evaluate your business against. And that questionnaire is available for free on the website. Now, one thing we've learned in doing this program for 5 years is that many of you are looking for a way to get started with the 1M1M program without paying the full $1,000 annual membership fee and making the one-year commitment. And we are just introducing 1M1M Basic, which is a curriculum-only program that is $99 a month. And actually, Ben Stern, who presented earlier, is already part of 1M1M Basic. And what this allows you to do is start using the curriculum and developing your knowledge. What you don't get is all the other pieces of 1 million by 1 million premium, but you can certainly get started, and we have a very rich curriculum available in the program that has been developed over the last 5 years. We launched it at the end of 2010 and updated it every month. And the case studies, we have over 700 case studies that have been developed over a 10-year period. So it's one of the richest startup curriculums available anywhere. And it does follow a methodology. It is not focused on raising financing as the be-all and end-all of entrepreneurship. We do not believe entrepreneurship equals financing. As you heard, both Venky and I gave several people today the feedback that you're too early. If you're trying to raise financing on a concept, you are way too early. You're not going to succeed in raising financing on a concept. You're going to have to develop to a point where you may be financeable, and if you are financeable, we will be happy to introduce you to investors. That's the methodology, and that's what works. You know, the truth is that's what works. And even if you want to apply to a Y Combinator or Techstars, you're going to have to bootstrap your way to a certain level of validation before even those accelerators are going to accept you. And that's the reality. So we have decided that we're going to fill that gap, you know, of the very early stage companies, of the companies that are going to have to bootstrap perhaps even all the way, and those who are going to have to bootstrap their way to financing and help you along in that phase of the journey as much as possible so that, you know, you get help when you really need it. We don't believe in coming to the rescue of victory, you know. The problem with the current ecosystem is everybody wants to come to the rescue of victory. Once you provide a camera-ready, you know, presentation, people are willing to write you checks and invest and take equity. In my opinion, that's not very helpful. Real mentoring, real incubation is a much more complex game, and we have actually figured out how to do that at scale. So take advantage of the program, and there's tons of information on the website. You'll find huge amounts of material to make your decision from. And let's see, I want to introduce you to Irina Patterson, who will be happy to answer questions for you if you have questions after this session. Her email address is irina@1mby1m.com. We're kind of at the end of the session. We don't have much more time left, but just because we are here and we haven't had a chance to take any of the audience questions, I would like to keep the line open for a little longer. And if you want to ask questions, we will stick around and answer your questions. So feel free to ask questions in public chat or use the phone line on your screen to dial in and ask questions. But be quick, folks. We've already been here for an hour and a half, so we need to let people go, get on with their work. Anybody? Quick questions, comments, issues?
Hello.
Yes.
Hi. Thank you. This is my first experience, and I enjoyed it. But tell me, what would you suggest in terms of, you know, kind of the stage at which you would really recommend jumping on and pitching? I mean, obviously, I can do it at any time. I have a business that's already up and running with very limited revenues. But what would be the ideal time to have some established revenues, or what's the recommend?
Could you please identify yourself?
Sure. I apologize. So my name is Craig Spann. And I have a value transfer company that is up and running basically since the beginning of the year.
So in this session, you can pitch at any stage you like to. It's not a problem. Because we are, this is a working session. We work with you to help you with advice and guidance on how to go to the next level. So here there is no requirement on when you pitch. If you're thinking about pitching to investors, that's a whole different ballgame. There's a whole set of requirements that investors, will require for a credible presentation and a credible outcome. And we don't recommend you pitch too soon, because what will happen is you will get rejected, and then it's going to be very hard to get another meeting. And in any case, it's going to be hard to get a meeting without a certain amount of validation work in place.
Yeah, I'm going to say I'm not even ready to even think about investors. I mean, it's something down the line. I'm talking about in this forum.
You can pitch anytime you want. You can pitch anytime you want.
Perfect, perfect. Well, thank you very much for this. Actually, Venky, I might be reaching out to you. I'm currently using Nexmo, and I would love to be able to talk to you and see if you guys might be a good alternative for us.
Sure,
That's
yeah.
Venky, absolutely.
Okay, so thank you very much. I really enjoyed this, and I'll be back.
All right, terrific. Anybody else?
Take care.
Chitan Singh, okay, helpful, good. Please keep coming back. Just by osmosis, if you just start attending these sessions on a regular basis, you'll learn a lot just from being here and listening to the discussions. And it doesn't cost a penny. Anybody else? I don't see any further questions. I don't see anybody on the phone line. So thank you very much for attending. Venky, thanks very much for staying through the session and mentoring the entrepreneurs. Your story is fabulous. I'm a huge fan. And we'll have you back sometime.
Sure. Thanks for your time as well.
Bye-bye. Take care, everybody. Good luck with your projects, and we'll see you back here next week, same time, same place. Bye-bye.
Bye-bye. Thanks, guys.